Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Barajan, currency analyst, and today is Monday, May the 29th. The pairs we're going to be looking at for this week are the dollar-yen, the euro-dollar, the pound-dollar, and the euro-Swiss franc. We're going to start first with dollar-yen. We can see the pair is looking rather bearish at the moment. RSI has just fallen below the 50 neutral level. The MACD has also weakened in recent days. It's trading below its red signal line. We're likely to see support coming, near-term support coming from the 50-day moving average at around 108.20. Just below that, we have the 38.2% Fibonacci retracement of the downleg from 113.38 to 104.62. A drop below the 108 handle would potentially signal further losses in the near term, and that could take prices towards the 23.6% Fibonacci at 106.70. A drop below 106.70 would risk taking the pair back towards those lows from back in March around 104.62 and would erase much of this uptrend that's taken place since late March. If we do see an upside correction, though, there is immediate resistance coming from the 50% Fibonacci retracement at around the 109 handle. A break above the 109 handle would help shift the near-term bias to a more neutral one, but we would really need to see a climb above the 110 handle in order to return to a positive bias. That's the 61.8% Fibonacci, and also where the 200-day moving average is currently flatlining. So definitely a key resistance area there around the 110 handle. If we now turn to euro-dollar, it is looking very bearish for euro-dollar. RSI is falling deeper into oversold territory below 30. MACD is also running below the red signal line. And also, if you look at the Bollinger Bands, prices have spiked below the lower Bollinger Band, indicating that it's definitely oversold. So potentially we could see a near-term correction to the upside. If that happens, resistance should come from around the 1.1770 area. That's a previous congestion region. And not too far above that, we have the middle Bollinger Band, which is also 20-day moving average at around 1.1815. A climb above 1.1815 would help shift the near-term bias to a more positive one. But above that, we have a major resistance area around the 1.20 handle, which is also where the 200-day moving average is currently flatlining. If we do see the further losses, support should come from around 1.1480. That's a previous congestion point as well, and below that we have the 1.13 handle as another major potential support area. Let's now turn to pound dollar, because it's got a very similar picture to euro dollar. We can see it's also looking oversold at the moment, with both the stochastics and the RSI running below 20 and 30 levels respectively, although they do seem to be flatlining, so perhaps the downside pressure for pound dollar isn't quite as strong as the euro dollar pair. We do have immediate support from the 50% Fibonacci retracement of the long term uptrend from 1.2108 to 1.4376. A breach of that support area would potentially signal the start of a much longer downtrend, with the next support coming from the 61.8% Fibonacci at around 1.2975, and then below that the next support to be watched is just below the 1.26 handle, which is the 78.6% Fibonacci retracement. If we do see, though, an upside reversal, there's likely to be immediate resistance from the 1.33 handle, and above that we have the 38.2% Fibonacci at around 1.3110. A climb above the 1.3110 area would help ease the downside pressure. And our final pair for today, the Euro Swiss franc. We can see that prices have crashed below that longer term uptrend, longer term ascending trend line. Prices have now matched the low from back in January of 1.1445. They reached 1.1446 today. That's the swing low from earlier in the year. Below that, we've got the 1.1355 region as the next possible support area, and then much lower down, we've got the 1.11 handle, which is the 161.8% Fibonacci projection of the up leg from 1.1445 to 1.2004. If you look at the momentum indicators, RSI is looking oversold. MACD, we can see, is also turned sharply bearish. We can see it's steeply trending downwards. So further losses are likely in the near term, but in the event of an upside correction, resistance should come from the 1.1565 area. That's the 78.6% Fibonacci retracement, and above that we have 1.1660 around the 200-day moving average as another potential resistance level. In the medium term, though, the Euro Swiss franc is currently looking neutral to bearish. Drop below the 1.1445 would signal a more decisive bearish picture in the medium term. That's it from me. Thank you very much for watching, and have a great day.